Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening as we're here now on Thursday. Believe it or not, it's February 29th, leap year day, so you won't see this from me for 4 more years, and I hope I am here with you in 4 years. I expect to be, but you never know. It's right now, about 6:05 p.m. Central Time. Today we had the PCE numbers, and from my perspective, they were a little bit hot, not hot, a little bit. You saw the income level go up 1%, and that was the big surprise to me at first. But then once you dug into the report, you saw that there was big dividend income given out, and that counts as income, and some pay hikes. Obviously, the first of the year, so some people got raises. Okay, now I see where that's at. And that added about 0.6 more than the market was looking for. At the same time, consumer consumption fell a bit. So are people putting money away? Are they spent out on their credit cards? Not quite certain. Okay, that's a little bit confusing. I think the rest of the numbers were right in line. So now what we're getting ready for is obviously very soon we're going to be talking central banks. And you're going to see that left and right as we start hearing from all the banks now. And my guess is what we're going to see pattern after pattern is everybody will talk about cuts, possibility of them, but they're not quite ready yet. In Europe, we certainly saw lower CPIs today, and that definitely helps the pattern there. But one set of numbers isn't necessarily a trend. So I think they'll want to see a bit more here. But there's pressure on lots of different places that aren't America that have seen their economy suffering from high rates, the restrictive area. In America, we stand out. It's very different here. We have a burgeoning economy. It's doing exceptionally well. People have the jobs. They're making apparently more money, as you could see. The income level has gone up, and the market has moderate inflation. We had a bump. The question is it a trend or was it a bump? That we'll find out. When you take a look at the S&P on a mini weekly chart, the market is down for the moment 0.3%. You could easily have an all-time high close tomorrow. Hard to tell. The market's down 1.75. That's it. When you look at the chart action right here, big reversal day today in the market. You had an outside day up, so you got higher lows, higher highs. I like outside days, and the reason is they're a warning sign. Number one, the first thing is when you have an uptrend and you get one, it's a continuation pattern. But you get a hiccup if that low is taken out within 2 trading sessions of it being made the way that I approach it. So I don't want to see the 50-60 level now taken out through Monday. If it is, it's a big warning sign to me that maybe we're overdone and the market needs to set back now at this point. But where would the setback be is the big question. I mean, the 18-day average is the break number that's been holding, and it's at 50.44. So as much as I'd love to get in this market at some point a 3 to 5% correction, right now on that chart with all the action we have, your next objective's 51, let's call it 51.33 for all purposes. Do you have an embedded reading? Well, you can't count today because we don't know how that's going to finish out. But both numbers on Thursday were over 80. Both numbers were not over 80 the day before. So you do not have an embedded reading. If we go before that, both numbers over 80, both not over 80. So no, you're in an overbought area, not embedded. You don't want to see this number taken out, and barring that, the market can keep plugging along, but it's hard, very hard to buy from my perspective when you're overbought like that. Individual stock plays are easier. I'm having a lot more trades than I expected in my Spider ETF morning subscriber video. Getting out of things, rotating into new ones was happening today. So over the past week, it's been really a lot of trade in that, and I'm happy. When you look at the NASDAQ, higher lows. This was an old high and still is, but you still have higher highs. The trend is up, but you're overbought here as well. When you come over to the Dow, You have higher lows, higher highs. These are not all-time highs in these markets. They could be with a strong day tomorrow, but you're in overbought condition, got a nice bounce. What we don't want to see is this week's lows taken out. If you do, it could begin a correction. You always got to be on the lookout for it, given you haven't had one 3 to 5% correction this year. And this rally began in October in many of these different indices. So is it overdue? Absolutely. Does it have to happen? No. But there's warning signs. Example, another outside day up, but you went right to the upper Bollinger Band in the Russell, stopped just like that and got thrown back pretty hard, and you are overbought. I have no reasons here to yet be short. I have warning signs, and if they get triggered, then I have reasons to be coming out of the market. But right now, it's still systems go, but it's a hard market to get into fresh. It's time for you to switch over from your March bonds, notes, now into the June contract. All the open interest and volume is shifted. So, you lost the bearish embedded reading here. When? Let's come to this together right here. So, not here. Both numbers were still under 20. On the close today, you lost the embedded reading. It generally means price and this 18 or the 100-day average is going to be hit, and you basically got up there today. You almost satisfied it the day that it did it. It's hard to buy the market up there to go there again. Not quite the case in the 5-year note. So, did it lose the embedded reading is the big question. When you take a look at it, yes. So until the market takes out, I would say this low, the lowest low you just hit, the odds strongly favor that the market's going to try to make a run to the 18 and possibly the 100-day average in the green there, all right? But for my type of work, it's a piece of work that says don't be short. And to me, that's very important. It answers a question. In the dollar index, now you got a buy signal from my perspective on the close today. Taking out today's low would negate that. If it can go up, maybe the 104.61 level, the upper Bollinger Band, could be a target. In the euro, if you can get down and stay under the 108.04.5 area, you get a sell signal, and the market might be headed back to the lower Bollinger Band in that market. So we're getting that mirror image flip around. In the British pound, you've got, in no time at all, the past 48 hours, you've ended the bull run and you've entered a bear area. Lower highs, lower lows. Now, if you look at where the market is, it's sitting right on the 18-day average. You should not get over 127.02 before you try to make a run back here to the 125.70, maybe the 125.62 area. Something in that area is my guess. In the Bitcoin, no, I realize you're all going to buy it because it's going up to $100,000, but I tell you, you don't buy over Bollinger Bands. Am I bullish? Yes. Okay, so let's understand. I am bullish. All right, but buying over a Bollinger Band, no. What's got me bullish and has kept me bullish is my slow stochastic study. Once it turned bullish here, that was it. So we're going to look back and say, okay, that break from $65,000 all the way down here into the $30,000 area, that was the correction. It's run its course, and the market's on its way to making higher highs. And it makes sense because in April, you get to the next stage where in Bitcoin especially, you do the halving again. So all the computers get a new piece of code, and now they got to work just as hard to get half as much out of a Bitcoin production as they did. And that's the idea. You keep cutting the amount that are out there. With the funds plowing into the market, you've got new money viewing it as an asset class, and you see the buying through it. When we take a look at the Brent versus WTI, a wrench was thrown into the oil today when you saw the Israelis kill 100,000 Palestinians. Not 100,000, 100. And as I understand it, maybe hundreds wounded. I have no idea other than the photos that I'm seeing where a mass of people, there were some trucks that were bringing in food, went to them, and I guess they made according to Israel, threatening gestures to where a tank was and soldiers were, and to defend themselves, supposedly, they fired on non-armed people, but the crowd was so big they felt they had to. Again, I don't know the facts. I'm giving you what I am seeing, and that's all that I know. Here's what I do know. This has to set back. If there was any chance of everybody sitting for a truce, it does one of two things. It says, listen, folks, this thing is so serious, let's get this done. But unfortunately, that takes a level head. And now you won't have level-headed people when you just had this, if you will, the killing of another 100 people. And that can't make people want to sit down and sign truces. So it's a very fluid situation. Just when you think you got something that might happen, rug gets yanked out again. I don't know what that meant for a negative in the crude oil. I know that the Houthis have said that they have now got new weapons they're going to deploy to further disrupt Red Sea traffic. Okay, they've done a pretty good job already of doing that, but now they've got things that the West has not seen. I don't know what that means, but once we see it, we'll know. As you can see, momentum down, market just sort of whipping here, lower and low, higher high. Brent is the same thing. That was Brent. WTI is the same thing. Gasoline, I think, is trying to make a stand right now against the 18-day average. The question for me is how to get long the market and where, because I do want to be, I want my clientele and I want to be long from a mental perspective for the spring and summer driving season. Okay, is that the time just yet? It's close. Natural gas, well, when you lost the embedded reading, I told you you'd come up probably before you go for a new low. That's what the high percentage is, back to the 18-day average to fight a battle. And basically, you're back in a minor uptrend. It's probably going to lean back at the 180 level. It's already spent a lot of its energy. I don't know that it has a lot of staying power to the upside, but given how high it was, 320 down to, for all purposes, 160, this is a very feeble bounce, and it's either how bearish the market is or there's more bounce left. I happen to think it's how feeble the market is, and we'll find out if I'm right or wrong in that. Remember, if you're looking for information that we try to offer, and we offer a lot, the way to get this is not there, but it's right over here. Here we go. Our free offerings. Now, it's both. You see the charts I use? You can even get those. And I'm not talking the picture of it. I'm talking the charting software to try it out. We have two different versions of our charting software. I think you'll find them both fascinating. If I were you, I'd give them both a try. And then, of course, the different videos that I put out in the morning, the different free courses, the pivot points, the Arun indicator that go with that, the brochures we have. It's all on our website at iraepstein.com. It's under free offers, and also there's a cursor up here. Just give that a click, and you'll be able to work with it just as well. In the meantime, I'll catch you all in the morning. You have a good evening. I'm Ira Epstein.